Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to today's Top Stock Pick. I'm Jeremy Mullen here with Andrew Rocco, who will follow me. But first, we will be looking at Centress Energy. The stock is a Zacks ranked number one strong buy with the ticker symbol LEU. Centress is a nuclear fuel supplier that enriches uranium using proprietary technology to support commercial reactors and advanced nuclear technologies. The stock has surged higher on the back of earnings and some positive news for the nuclear energy industry. Now, LEU has more than doubled since the April low. So the question is if there's more meat on the bone here for the small nuclear play, or we could have a pullback. I think there is some serious upside, and today we will look into why this stock should be a buy into the end of the year. Now, before we get into that chart and all that good stuff, we're going to look at the company. So let's look at the profile page here, and as you can see, we have the rank of number one. We do have some style score issues with value and momentum, but growth is at a B. I really need to point out how small this company is. We're looking at $2 billion market cap. So we have a small cap here, but the good thing is there's not a lot of eyeballs on this name yet. So this one could really accelerate if the earnings and nuclear energy sector story starts to really gain traction. That valuation's at 34. It's not horrible. That's part of the reason we have this score of F in value. So let's look at the earnings picture. We're going to go to the price and EPS surprise. As you can see, back in 2021, the stock really got going. We made all-time highs after this strong quarter, but then came in during the market sell-off, and we got stuck in 2 years of sideways action with mostly beats, but some misses in between there. So the nuclear energy story just wasn't there quite yet. And then we started to pick up into the end of the quarter, made new highs into this earnings miss, came back in, new highs on this earnings beat, came back in, and then a whopping 1,000% EPS beat here on this last quarter that helped it accelerate higher. And we are trading at all-time highs. You can see up here around 125 after this recent nuke news that we're going to get into. But looking at this quarter, this 1,000% EPS beat first, we saw revenue surging 67% year over year. And these revenues are accelerating from rising energy prices, stronger volumes, and lower unit costs. And the gross profit expanded to 45% of revenue. So we're seeing a lot of earnings momentum, both on the top and bottom line there. Now, we also have to look at the earnings estimates. What are analysts saying, right? So you can see there's kind of a mixed bag here in the current and next quarter and what they're doing. But we have some movement higher here for the current year and next year. Looking at the actual numbers, we see a small tick up for the current quarter, some more progress on next quarter, and current year just goes crazy. So they really took numbers up here. And I think a lot of that had to do with kind of moving the momentum from next year here with some of this positive news. And then the company has a big backlog. So I would be watching these estimates to see how they move over the next couple months. And that will likely affect where the stock goes over the short term. More with these earnings estimate are the analysts. They're also taking some price targets higher. I have Evercore ISI with an outperform and 145 target. Now we're at 125 now, so that's pretty good. But HC Wainwright has a buy and a $300 price target. So we're going to talk about that in a little bit. But first, I want to talk about the nuclear energy news. So we're going to go to the White House executive order page, and I'm not going to go through every word here, but you guys can read this if you want. But to summarize, President Trump signed an executive order on nuclear energy invoking a wartime act over U.S. uranium independence. This move will speed up regulatory process for new reactors and improve uranium supply chains. Now, the significance of this for Centress is pretty big because the company is very involved in that fuel supply chain. It remains the only company licensed by the U.S. Nuclear Regulatory Commission to produce HALEU, which is a critical component for the future of small modular reactors and microreactors. Now, this is getting kind of deep. I wasn't very good in chemistry, and so looking into this, my head starts to spin. But HALEU stands for high assay, low enriched uranium, and it's a type of enriched uranium that contains between 5% and 20% uranium-235. That's U-35. This is an isotope that is used as fuel in nuclear reactors. Now, we don't want to go deep into this complicated stuff, but Before this news, H.C. Wainwright projected Centress revenue would grow to 428 million in 2025 to 3 billion in 2036. This reflects 11-year CAGR of 22%. They look for gross margins to expand to 25 to 30% by 2031. And when you add in this HALU opportunity, I'm excited to see how they revise their numbers coming up. So look for Wainwright's revision, maybe a new price target. So the momentum from that analyst and others are looking pretty good. All right, so we got that fundamental story written out pretty well there. Let's look at the chart here. And I don't have the 2021 spike here, but there's been two moves above those prior highs. And so we had this one back late last year and early this year. Obviously, with the March sell-off in the market, we gave up almost all of these breakout gains here. But the stock did start coming back. And when I was watching this one with some of the other new plays, I noticed from these highs to lows, it was struggling in here at the 61.8. But this quarter was just too good to pass up. So we got long, luckily, before this news in Commodity Innovators. What we're targeting is the extension here at 167. And if there's more tailwinds, more positive news with nuclear energy, I think we can continue higher, perhaps by the end of the year, way up here. So tremendous opportunity here. Definitely a buyer pullback. Maybe you want to chase at the all-time highs as it breaks these previous two levels. The stock is looking good, both fundamentally and technically. Okay, that's it for me. And Centress Energy, LEU is the ticker. Here is Andrew Rocco with his pick.
And thank you, Jeremy. And welcome, everyone. My name's Andrew Rocco. I am a stock strategist here at Zacks Investment Research. I also do manage the Tech Innovators portfolio. And today we're going to actually be discussing one of the names that is in that portfolio, also a stock that I own in my personal account. So again, this is the top stock pick for Tuesday, May 27th, and let's jump right into it. So my top stock pick is Broadcom. It's ticker symbol AVGO, and it's a Zacks ranked number 3 hold stock. And Broadcom is a semiconductor and technology company that plays a crucial role in the AI realm, not by creating the AI models themselves, but by providing the underlying infrastructure that makes AI possible. They have custom AI accelerators, which are called ASICs, ASICs. And unlike NVIDIA, which primarily offers general purpose GPUs, which are graphic processing units that are highly versatile for AI, Broadcom specializes in custom AI chips, what they refer to as XPUs. And really, these custom chips they offer superior performance, cost efficiency, and power efficiency to companies like OpenAI to train their large language model, ChatGPT, and for example, for Alphabet to train Gemini. So we're going to jump more into that. But first, let's talk about just the insatiable demand that we're seeing for AI infrastructure. This is by far the hottest industry on Wall Street. There's really no signs that this is going to stop. And it's not just a North America phenomenon. You saw Trump over in the Middle East. The Middle East, some of those oil-rich companies, they're looking to diversify. So they're looking to put some of that oil money with oil prices lower. They're looking to parlay their oil money, which they have obviously a lot of, into the AI realm. So the AI boom is still in its early stages. As AI models become more complex and their applications proliferate across industries, the demand for the underlying compute, networking, and storage infrastructure will continue to skyrocket. Broadcom sits at a critical juncture, providing essential components for both the AI processing units through their custom chips and the networks that connect them. So really, the plumbing of AI goes through Broadcom. And let's talk about what makes Broadcom unique, what gives them their competitive moat. So obviously, NVIDIA dominates the general purpose GPU market. And the trend among hyperscale tech companies, though, is to develop their own custom AI chips, like I said. So they're moving towards Broadcom for this specialized chips. And Broadcom is a go-to partner for these giants in designing and producing these specialized chips. This means they are not directly competing head-on with NVIDIA, which is obviously good news, but they are complementing the AI ecosystem by enabling these custom solutions. So this strategy really provides them with a unique and robust revenue stream. And the VMware acquisition bolsters growth. So the acquisition of VMware has expanded Broadcom's reach into enterprise software as well. So many businesses want to run AI workloads within their own private or hybrid cloud environments for data security, compliance, and cost control purposes. So VMware's infrastructure allows us and provides software, the foundational platform for these private AI deployments, offering Broadcom another significant avenue for AI-driven growth just beyond those hyperscalers. So they have a really diverse business within the AI realm. And let's talk about that steady and robust growth. Broadcom has secured deep engagements with some of the biggest names in tech for their custom AI chips and networking solutions. These long-term partnerships provide stable, high-value revenue streams. And obviously, that's exactly what you want as an investor. This really has the trifecta, this stock. It has the liquidity, it has the growth, and it's part of a hot industry group. So it really has the total package. It's not going to be the fastest moving stock in the market, but it is definitely an outperformer. And I'm going to show you what I mean by that. So savvy investors understand the importance of relative strength and really the value of bear markets and corrections. Obviously, we had the tariff tantrum in the beginning of the year where investors kind of got spooked out of stocks. Now stocks have recovered. They're still not back to their highs. But what I do like about Broadcom is you can see versus NVIDIA, versus the S&P 500, it's been outperforming a lot. It's actually up 61.9% year to date. So in those market corrections, really what I like to look for is the tennis balls versus eggs. I want to be in the tennis balls. But what I mean by that is it's a metaphor for those stocks that bounce back the fastest. And AVGO, or Broadcom as it's known now, is the greatest example of that, up 62% versus 15 for NVIDIA. It's right next to its highs. And what I like to say is strength begets strength. So usually the strongest stocks that hold up the best during the correction, as soon as that market pressure is alleviated, those stocks tend to outperform. And that's exactly what I expect for AVGO. Now, let's look at the earnings surprise history. So Wall Street, obviously, it's not only about expectations, it's about beating those expectations. And as we mentioned before, it is a consistent winner. You can see it's delivered positive surprises versus the exact consensus estimates for 20 quarters and counting. So you can't ask for a better earnings surprise history than that. And then really, the last thing that I like the most about Broadcom is within that tariff-driven bear market or correction, however you look at it, Broadcom's management had enough conviction to announce a 10 billion share repurchase authorization. So while other companies were pulling back, they were, suspending guidance, Broadcom is kind of a power move. They bought back shares. And really what this does is it not only does it show conviction in the company by management in kind of an uncertain time, it also decreases the supply of shares outstanding. So Apple bought back shares for years and the stock rallied because all investing is, remember, at the end of the day, is that supply and demand dynamic. So if we bring down that supply and there's a lot of demand for shares because investors know that AI is growing fast, that's going to be the perfect cocktail for AVGO going into the future. And let's just take a quick look at the technicals here. We're looking at a daily chart. So you see that tariff-driven correction. We rebounded really fast. We're over the key moving averages, the 50-day and the 200-day, which is the red and the black line that you're seeing on your chart. Now we're forming this beautiful daily bull flag. You can see how tight the action is in here. That's exactly what you want to see as a technician. And you can see that I've drawn out the fib. So earnings are coming up. for Broadcom. We also have NVIDIA earnings tomorrow. If we're able to break out of this base, the fibs say that we can go, the Fibonacci levels say that we have a target of around 321. Is that going to happen overnight? Of course not. But that's just something to look forward to. We have this big bullish consolidation. We have the relative strength. We have the fundamental momentum and the hot industry group. And now we have the market wind back at our shoulders. So kind of from all aspects, things are looking good. So that wraps it up for my top stock pick of the week. Again, my pick was Broadcom AVGO. And my name's Andrew Rocco. Thank you guys so much for watching. One quick note, we do have a promo going on. If you guys want to visit Zacks.com/promo. Again, that's Zacks.com/promo. And everyone have a fantastic week. Thank you for tuning in.